Alrighty, good morning, everybody. It is Friday, July 8th, 2022, and we're going to get started here with our pre-market analysis for the S&P 500 futures market. I'll just go real quick through yesterday just to show you what happened here. Coming into the open, remember, right when the open started, we had some really strong market internals. So I told you getting long was probably the best thing to do. And so there were a couple of opportunities. We had basically right at the open here, could have just bought the market right around the FMA, but it never pulled back to fill my contract, which was a tick or two lower than where the market came to right at the open. And then there were two other opportunities, maybe even arguably that third opportunity right here. Right off the FMA didn't work. Then this level, our larger time frame retracement held really nicely, and then bam, right there, that FMA brought you 20, 30 points higher and never came back. You can see where I got in here, got in here. This one didn't quite play out. This one went for a pretty nice push. And then as it started breaking lower, we talked about potentially getting a deeper pullback. So got short off the back end of the 200 here. And just want to point out that we came right into our major swing right here at 85.75 and got a pretty decent pullback, but then the bears didn't have enough strength to really break through the FMA, and then they brought it up, and then they held right off the top end of that level to try to push and didn't really go anywhere. So they and right out of the open, I should mention as well, they came right to our minor level 75 and literally sat here and tagged it for quite a while and could not break through till eventually they got through it. And then when they pulled back, they bounced 1 point in front of 38.75 here and went ahead and continued to push higher eventually. And you can see once again a beautiful hold. Maybe a little messy over in this area, but then once they appreciably got away and pulled back right to that level and bounced with maybe one tick of heat. And then the high of the day was basically right up to our next major eye level at 1650. It turned just about 2 points in front of it. And remember, these larger major eye levels are major structure zones. So we're not talking about always hitting this to the tick, even though that does happen pretty often. We do have a little bit of a kind of zone around these major levels. So we essentially came right into it, and now we got the rejection coming into the overnight session, and again came right back to our major swing level, bounced off of it, and tried to break out to the upside, get through the VWAP and the 200, but just again not enough strength, and now it's just kind of been a little messy over in this area. I want to go to the higher time frames and just show you um, kind of an interesting observation here, and we see this over and over again, but I'm going to show you when we broke down here at the beginning of June and the market really started selling off. Just want to show you what happened. We came down, we held the eye level at 37.09, came up and we held 38.22. And the 60-minute might not, it's just there's a lot of lines on here, but bear with me. We held 38.22, came down, and then we came up and we held, actually, where are we? Actually, I'm at the wrong section of the chart here. So let's come over here. So we got the major sell-off from up here, right from our major eye or minor eye level zone here, 40, 45, 50. In fact, we fell right from 39.50, came down, got the bounce just in front of 37.35, and then it was basically rejection from major eye level 38.22, get a pullback, bounce up, get a rejection from minor eye level 38.53, pull back, push up, get a rejection from our next minor eye level 38.75, pull back, push up, get a rejection from our next major eye level 39.1650. So it was literally one by one. We hit 22, we pulled back, we hit 53, we pulled back, we hit 75, we pulled back, and now we're pushing right to 1650 and pulling back. So I'm telling you that the minor eye levels and the major eye levels are major structure zones, and this is what you would expect to see happen. Some really nice, basically stair step action right off of these levels. So I just want to mention that just because it does work out beautifully there. And let's go ahead and look at the daily, and we'll dial down and start working on levels this morning. So on the daily, don't really have much to say here. Obviously, all these major wicks to the downside were giving us some clues back a few days ago that we could expect there to be an attempt by the bulls to push higher. And sure enough, they have been doing that. And right now, we're getting right up into, like I said, our next major eye level at 1650. And then just a few points above that, I believe 3922, we have the 50% retracement of the whole sell-off. So we're slowly coming back up to test that. Remember, we already came up and tested the 50 and got a pullback and then peeked through it on the next 2 days after that. And now we're coming back up into that area right now. So from the zoomed out perspective here, not really too much to mention. We do have a little bit of an argument here for you know what, never mind. I'm going to hold off on that. I don't really have much to say here on the daily, except for the fact that we now have a bearish divergence from this high. So if we look at the previous highs here back from June 28th, and we draw across to the next high were made from yesterday's high, we have a daily bearish divergence here. Okay, so just be aware of that. Doesn't mean it has to hold. Remember, today, if we start to go ahead and push on through the high of yesterday, the RVI down here could continue to push higher. And if we break the high of last week, I believe that's the high of last week, we might end up not having a divergence. So it could turn into a false signal, but right now that's what we have, and that's all you can go on. That's what the market is showing, bearish divergence from that high until today plays out. And if we don't go ahead and do what I just explained, we should have some follow through with that signal. So be aware of that coming into the open. On the 4-hour here, we do have, as the market pulls back in the overnight session, we could make the argument for a bullish divergence all the way until the market breaks below 38.30, which I believe, if we go down to 38.30, is basically the low of yesterday. So if we break the low of yesterday and break that 50% retracement level, which we'll talk about, that 4-hour bullish signal will no longer be there. So just be aware of that as well. Just seeing if there's anything else we can point out here. There are no bearish divergences from yesterday's high, but there is a beautiful, huge wick to the upside and basically a failure from there. So that formation, that candlestick, is a nice thing to line up if we have a conjunction of bearish signals from that high. Even if the signal isn't there from a divergence perspective, the candlestick itself looks pretty bearish. So we've got that. And now let's go into the 60-minute and look at the levels we want to play with here this morning. 60-minute as well from the high of yesterday has that huge wick to the upside, just like on the 4-hour chart. And so we have a daily bearish divergence from the high of yesterday. We have the 60-minute and the 4-hour showing a very bearish looking candlestick. And then even over here in the overnight session, just an hour or two, couple hours ago, huge wick to the upside, bears swatted all the way back down, and now we're making new lows. So somewhat of a bearish clue. I think the 4-hour also had a candle that looked like that. Maybe not, but yeah, this is probably it right here, this huge wick. And if we continue to pull back here, that will be one of those candles where we get a huge wick to the upside and then close at the lows. So just be aware of all the potential bearish stuff that we're seeing off of the highs right now. If the bulls end up breaking out to the upside, we're going to negate all that stuff. So then it's basically just like I said earlier, we hit, whoop, wrong button there. We hit 22, we pulled back. We hit 53, we pulled back. We hit 75, we pulled back. We hit 16.5, we pulled back. Interestingly, holding the 75 area again. So next stop would be right into that next pocket up there, 40, 45, and 50, right where we failed about a week or two ago. So we got that on the board there. And let's look at, so up above the high of yesterday, which was 39.14 quarter, just about 2 points below that major level. If they break out through the high of yesterday and they can get through the major structure area here and that retracement level, then next stop, like I said, is going to be up into that pocket. But we also have everything up above that. And again, I'm not going to sit here and list all this out because I've mentioned it a million times. So all I'm going to do is expand out. Remember, there's a pocket of consolidation right there around 4006 to 4030 with some very specific levels in there. So I think that's 0650. Let's make sure that's perfect. And I want to bring this out to the end of today so that we have it on our charts. So I'll have to expand these three levels out. Remember, it's 4006, 4015 and 3/4. And let me do this. Let's bring this out to the 9th. And then the top end of it is that 4030 area, 4030 half. And then in between those two widely spaced levels, we do have 4023, and it just is what it is. There's 06, 15, 23, and 30. And remember, going back, it's this pocket of major congestion. So everything else above that is all levels we've already established and you should have on your charts. Now coming down below the low of yesterday and then the low of a couple days ago, again, I don't want to sit here and list this stuff out because it should be already established for you, but I will extend these out so that they cover our short time frame charts. And let's see if I can actually grab that. There we go. We'll bring that out to tomorrow. All right, perfect. So everything below the low of 2 or 3 days ago, again, all the same levels. Now, let's talk about what's going on between the high of yesterday and that low from a couple days ago here. We do have a leg from that low at 37.44 all the way up to the high of yesterday. And that gives us three major retracements here within all this garbage price action over here. We have the 38 retracement at 38.49 quarter. We have the 50% retracement at 38.29 or 38.29 quarter, whichever one floats your boat. And then we have the 61.8 at 38.09. Outside of the major retracement levels, we have our daily power levels, which you guys should understand what they're telling you. Getting down and staying below the OPL, staying below 50% of the day before, all clues for the bears. And we have our major and minor levels inside of here. So you should already have that stuff on your chart. But the new levels we have are the new retracement levels and the power levels, which you should be aware of. Notice that the 50% of yesterday was basically our minor eye level at 38.75. And then the low of yesterday, the power level down here at 38.32 half, is basically the 50% retrace. So I guess if we want, we could go ahead and just shade in that little pocket there, potentially find some support around there. Let me go ahead and put this on all the charts. And there's one other little pocket here. So notice once we get through 38.07 quarter here, there's really not much going on until we get all the way down to 37.82. There happens to be just a little bit of some price action going back from the last week or two over here that might end up leading to some type of support over in this area. Not saying that it's 100% guarantee, but we do have this pocket here, 37.89 to 37.93, that could potentially see some type of support in that area. If they don't end up holding, it's right back to the other major and minor levels below that. And I think that basically sets us up for this morning. So again, pretty good confluence of bearish stuff from the overnight high. but we also do have the 60-minute and the 4-hour showing a potential bullish signal from the overnight low. So kind of like a lot of mornings. Let me go back to my daily. There's not enough resolution down up on the daily, but on the 4-hour and on the 60-minute, we basically have some pretty good bearish clues from the high of yesterday, but off of the overnight low, a pretty good bullish divergence so far. So what we want to see this morning is either a break through the high of yesterday or a break below the low of the overnight session that will open up all of these targets that we have on the chart. And until that happens, it's really hard to say who's going to win out here. Obviously, once the market opens, we'll get some internal information as to what the larger market is actually doing, which might lead to some directional trades. But right now, it's going to be a battle between the bulls off the overnight low and the bears off of the previous daily high. Trading up between those two areas could be just as dangerous as trading between the overnight low and the previous daily high back on July 6th. If you guys remember, it was just up and down, up and down, up and down. And then finally, right at the end of the day, we kind of peaked up and came right to our minor eye level at 75 and then pulled back again. So question is here this morning, are we going to have a similar situation where we break out to the upside, or are they going to actually fail and get a deeper pullback here? And remember, anything's possible in the market. Analysts can sit here and tell you a million different possibilities. What we have to do is react to the market when it opens and just follow the big guys. So that's what we're going to do. And we have our game plan. Getting up through, staying above the 50%, getting up through the holy orange power level, the close of yesterday, all opening us to the high of yesterday, and then getting through there opens us up for there. So I think that's basically it for the week here. Gonna get going. We have the open here in about a minute and a half. So hope you guys have a great weekend. We'll be back next week. And until then, be well. Take care.